What's going on, my fellow wealth creators? Matty Ice here. In this video, I want to talk about the difference between buying dividend-paying whole life insurance and term life insurance so that you can make the best decision for your specific goals, needs, and current financial situation. The main reason I want to make this video is because oftentimes this conversation is extremely lopsided, right? Think about it. When the term whole life insurance comes to mind, when you hear that, what do you think about? Like, avoid it like the plague, right? It's a horrible investment, terrible place to put your money. You want to buy term because it's cheaper and then invest the difference, right? That's what is shoved down our throats by mainstream financial media all the time. The problem is they're only telling half the story, and it's the half of the story that promotes their narrative, right? We don't hear about all the other side of the story, about all the incredible long-term benefits that we can get from a dividend-paying whole life insurance policy. Not to mention, you can custom design them for high cash value to turn them into extremely efficient long-term savings vehicles that provide a very powerful financial foundation in our lives. How do I know this? It's exactly what I'm doing in my life, right? Once I heard the other side of the story and I learned how these things work, that's when I was like, well, this thing seems pretty amazing, way better than what I've been taught my entire life. That's for sure. And it's been a game changer in my life. I have 2 custom designed dividend paying whole life policies. And guess what, guys? I also have 2 term policies as well. So I have both. So it's not even an either or conversation. It just comes down to what you're trying to accomplish. But you can only make a truly informed decision, in my opinion, when you understand what your options are, how those options work, and how they fit into your financial plan and how they benefit your personal finances. Maybe it is buying term insurance right now. Heck, maybe it's a dividend paying whole life policy that's set up for high cash value. You know, if you're an entrepreneur, real estate investor, I do private money lending in real estate. I'm about to do my second deal right now, and I'm using my policies to do that. It's just absolutely incredible, right? So my point, my goal with this video is to give you the information you need about these products, how they fit into a long-term plan so that you can make the best decision for you. Because just because something's cheaper doesn't mean it's best for us long-term, right? That's often the argument around, or the conversation around, like buying term and investing the difference, right? You buy term because it's cheaper than whole life, and then you invest the difference. The problem with that is, number one, most people don't invest the difference. All right. Number 2, like I said, just because something's cheaper doesn't mean it's best for us long term. For example, if I go to a car dealership and there's a car in front of me for $30,000, very low mileage, never been in an accident, maybe it even comes with a warranty, and then there's another car that's $10,000, but it has way more mileage. It's been in a couple of accidents. There's no warranty on it. Do I buy it just because it's cheaper? No. It still might be the best decision, but I'm not going to make that decision just because it's cheaper. I'm going to think about the long-term implications of the decision that I'm about to make. I'm going to weigh both the options here and consider the long-term implications of each, right? That's what we need to do. Just take a much more holistic approach to our personal finances, and I think we'll do a lot better. So let's get into this. I want to share my screen. Got a little presentation here for you guys. Here's the analogy I like to give and use when I am describing the difference between whole life insurance and term insurance. It's the difference between buying a house and renting a house. Believe it or not, there are a lot of similarities. And buying whole life insurance is kind of like it's the life insurance equivalent of buying a house. And here's why. So we'll get into it in a second. But right now, I want you to imagine a 3-bedroom, 2-bathroom house with 2,000 square feet. And we're only talking about the living space here. We're not talking about the long-term benefits of buying a house versus renting. You know why? Because we never hear about the long-term benefits of buying whole life insurance versus buying term insurance, which is essentially renting life insurance for a specified period of time, because term insurance expires. Doesn't mean it's bad. Doesn't mean you shouldn't do it. Like I said, I own 2 term policies myself. Okay. But I'm saying it's not the cost of the death benefit when it comes to life insurance is not the only factor to be considered when making a decision. Just like the living space of a house is not the only determining factor on whether you buy it or rent it or even get that particular house, right? So, but imagine that for now. Okay. And let's talk about the difference between owning that house and renting it. All right. So when we own a house, when we buy a house, guys, it is way more expensive than renting. Just like whole life insurance, the death benefit is way more expensive than term insurance, right? But buying a house is way more expensive than renting, yet people do it all the time. Why? Because there are far more benefits that you get long-term from owning the house than renting it. That's why. All right. But it's much more expensive. Think about it. You got to save up for the down payment. How about the interest you're going to pay on the mortgage? A lot of times people end up paying for the house twice because of how much interest they pay. It's insane how much interest is paid over 15, 30 years, whatever the mortgage is that you get. Maintenance costs, right? What happens when the roof starts to leak or the AC goes out? I mean, if you're renting, your landlord takes care of that. That doesn't come out of your pocket most of the time. When you own the house, it comes out of your pocket, right? So long term, a lot more expensive. Yet people buy homes every single day. Now, why do they do that? Benefits, all right? Ownership. You own the house. It's yours. It's an asset that you can utilize for a lot of different things. We'll get into in a second. But when you're renting the house, that's not yours. That's the landlord's house. Someone else owns it, and they're giving you permission to live in it. When you own your house, you don't need permission to live in your own house and do what you want with it, right? So ownership, really powerful benefit. Another benefit, it builds equity, all right? So as your home value increases and you pay down and you're paying down the principal on your mortgage, right? You get more and more equity. Okay, you can use that equity for an emergency, for investment opportunities, whatever you want. It's up to you. You can access that equity if you need to or if you want to. You can't do that when you rent, right? Same thing. Same thing with term insurance. We'll get to that in a minute, though. There's no equity when you rent the house, though. The equity belongs to your landlord, right? So you don't have that benefit when you're renting. When you own your home, it can be paid off. You can pay off the mortgage, right? And still own the asset. You still own the home after you pay off the mortgage, right? Well, you can't pay off a lease on a home. You could pay it ahead of time, but you're always going to have a monthly payment when you're renting. It can never be paid off. Well, that's not the case when you own it. You can actually pay that off and not have a mortgage payment anymore. You can sell the house if you want. If you want to move somewhere else, or you want to collect all the profits that, maybe you've owned it for a long time. You want to sell it and make a profit. You can absolutely do that. Obviously, you can't sell a house that you don't own, right? So you can't do that when you're renting. You can pass the home off. You can pass on the home to your kids and loved ones if you want. You can't pass on what you don't own, right? And also when you own, there's a set payment with your mortgage. Now, your home insurance and property taxes, that can fluctuate. I'm talking about like the principal and interest part of the mortgage, though. It's a set payment that doesn't change. Well, with renting, oftentimes rents increase. Heck, I know people, their rents have increased like 20 to 30% over the last 3 to 4 years. I mean, it's pretty crazy. So you're not locked into any specific payment when it comes to renting. It gets more expensive over time. Starting to see where I'm going with this. It's kind of similar to whole life and term insurance. Now, but before we get to that, it seems to me that really the only benefit to renting is it's cheaper on the surface. Now, again, nothing wrong with renting. Heck, I rent right now because it makes sense for my current financial situation and what I'm trying to accomplish long term. But long term, I do want to own my own house. So I want to own my own land and all that good stuff. But right now, it doesn't make sense based on my current situation. There's nothing wrong with it. But my point is, we don't make decisions just because something's cheaper. That's really the only benefit here to renting, oftentimes, the primary benefit, I should say. Okay, so let's continue. Let's compare renting to term insurance, and then we're going to compare owning a home to whole life insurance, and then we're going to wrap this up with how to determine which one is right for you. All right, I'm going to give you some different scenarios for that. But let's compare this. So you're renting a house. Eventually the lease expires, right? So oftentimes we have a lease for 12 months, 15 months, 24 months, whatever. It's the same thing with term insurance. You can get, oftentimes it's 10-year, 20-year, 30-year term insurance, and then it expires. So it's very similar to a lease when you're renting a house. When that term expires, you don't own that asset. And you don't own the asset to begin with, but you don't have the life insurance anymore. Just like with your lease expires on your home, you can't live in the home anymore unless you renew it, probably at a much higher cost, or you move somewhere else, right? So same thing here. Renting gets more expensive over time. Well, guess what? Term insurance gets way more expensive over time. If you look at a 30-year term policy, for example, that expires when somebody hits 65 years old, let's say, right? They've had it for 30 years. Let's say they were paying $1,000 per year for their coverage. All right. Well, when that term policy expires, that thing's going from $1,000 a year to like $15,000, $20,000 per year. That's just the nature of term insurance, right? It gets way more expensive as you get older when you need it the most, right? And now you can't afford it. So most people just let it expire because they've been sold this bill of goods about being self-insured, which I don't buy into whatsoever. That's a totally different video. I'll do that another time. But the point is, it's term insurance very similar to renting because it gets more expensive over time. With renting, like I said, you don't have any equity. Your landlord, all the equity belongs to your landlord. You have no equity to tap into. Just let the same with term insurance. You don't have any equity. You don't have the equity in a home is like the cash value in a whole life policy is very similar to the equity in a home. With a term policy, you have no cash value at all. Okay, you can't access it for emergencies and investment opportunities. Renting, like I said, it can't be paid off. You can't. Term insurance cannot be paid up. You're always going to have a cost of insurance that a premium, a bill that is due every single year when you have term insurance. That's not the case with whole life insurance. You can actually pay off a whole life policy. There's nothing to pass on when you rent. Same thing with term insurance. There's no death benefit once it's expired, so you have you're not passing on that death benefit to your beneficiaries, to your loved ones, etc. It's gone. All right. Now, again, it's not to say that not to do term insurance. All right. It is very good at getting a lot of death benefit for a very small amount of money. But we need, again, take a much more holistic approach, weigh the pros and cons, and maybe build towards owning an asset or having an asset that you actually own that's going to grow with you for the rest of your life, like a dividend paying whole life policy. Right. Let's see. All right. So let's compare buying a home to whole life insurance. Okay. So with a home, you put down, you put a down payment on it, right? You save up for that down payment. You actually can do the same thing with the whole life policy, which I absolutely recommend. It's called front loading the policy. And basically what that means is you can put a larger amount into the policy in the first year up front, kind of like a down payment, far more than what you will put, like what your premiums are moving forward. All right. It's called front loading. I highly recommend it. And I've done videos breaking down my policies doing it. I'll link that down in the description. But there's a lot of benefits to putting a down payment on your whole life policy because it supercharges it and it gives us access to a lot of cash value in the very first year. It's a lot of benefits to it. All right. With your home, you have that set payments of your principal and interest that does not change. Same exact thing with whole life insurance. You have guaranteed premiums. Costs are level. So we were saying, with term insurance, it gets way more expensive as you get older. That's not the case with whole life insurance. All the costs are leveled out. So essentially what happens, and this is why it's more expensive in the beginning, whole life insurance that is, than term insurance, is because in order to level out those costs, the life insurance company is taking some of the costs on the back end, putting it on the front end so that it levels out through the entire policy. That's what's happening, right? But on a comparative basis, like from a cost of insurance standpoint, whole life insurance is actually way cheaper later on when you need it the most than term insurance, right? You're not going to get that surprise, $20,000 of cost of insurance that you would with an expiring term policy at 65. That's not going to happen with a whole life policy, right? The home builds equity. Guess what? Your whole life policy gets equity as well. It's called cash value, but you can access that cash value treat it like an emergency fund, an opportunity fund, whichever you want. I use it for both. So if an emergency comes up, you could borrow against your policy to handle that emergency. If you have a wealth building opportunity, my favorite is private money lending. I can borrow against that policy and make money that way. I can build wealth like I normally would. It's really powerful. All right. A home can be paid off. Same thing with a whole life policy, guys. Did you know that? You don't have to pay into a whole life insurance policy your whole life. It will be there for your whole life, but you don't have to pay into it for your whole life. You can actually pay it off just like a mortgage. You could pay into it for 10 years, 20 years, pay to 65, pay to 70. You're in the driver's seat with that. You decide how long you want to put money into your policy. And that's another conversation where like treating these policies like very efficient savings vehicles, especially when we're using the cash value for emergencies and wealth building opportunities. But anyways, it can be paid off. right? And you still own it. It will still grow. The cash value and the death benefit will continue to increase for the rest of your life, just the same way when you pay off a home. Does your home just stop increasing in value? Do you not own the home anymore? No, you own the home, and your home continues to increase in value even after you've paid off the mortgage. It's the same exact thing with a whole life policy. All right, home can be sold. You can sell your whole life policy technically. You can also surrender it. So if you wanted to, you'll pay taxes on any gains, just like you would if you sold a home and you had some gains. Then you pay taxes on that. Not usually recommended to surrender a whole life policy, but I'm saying you have the option of doing that. All right. You pass on your home to your kids. Well, guess what? You're passing on with a whole life insurance policy, a massive income tax-free death benefit that goes right. It avoids probate. It goes right to your beneficiaries, your loved ones. And like I said, that death benefit grows for the entire policy. That's awesome. Kind of already touched on this. Your home continues to increase in value. Your whole life policy does the same. There's a guaranteed growth rate plus dividends. Now, dividends are not guaranteed, but the companies that we work with, these mutually owned life insurance companies, have never missed a dividend payment in over 100 years. So it's probably pretty safe to say that it's going to continue. So you get that cash value growth. They typically net 3 to 5% tax-free compound growth for the life of the policy when you custom design them. Not talking about the traditional whole life policies that Dave Ramsey likes to hate on. We're talking about high cash value custom design policies. When you set them up right, they can net very similar to a high yield savings account. All right, so a lot of benefits, a lot of really cool stuff. So here's the thing. Here's the question: is would you rather rent your entire life or eventually own your own home? Okay, so for me, sometimes, like I said, renting makes sense. It's not that it's a bad thing, but from when we're thinking about our long-term plans, do we want to rent our entire lives, or do we eventually want to own our own home? Well, I want to own my own home. And just like I want to own my own assets as well. I don't want to rent life insurance for my entire life. There's a time and a place for it, but I want to have a plan where I have assets that are going to grow for me for the rest of my life and provide a number of different benefits. That's why I think dividend paying whole life insurance absolutely has a place in a lot of people's financial plan. Now, let's talk about determining whether you should buy term or whole life insurance right now. Because like I said, dividend paying whole life, absolutely not for everybody, at least right now in the current financial situation that they're in. So let's talk about that. When should you do which? All right, buying term. All right, so if you're on a budget and you want to get the most amount of death benefit that you can for the least amount of money, term insurance is the way to go. With that said, I usually recommend buying convertible term life insurance. That way you're locking in your insurability. Okay. You get your the financial protection for your family in case something happens to you. But then when you're ready to buy the home, right? Buy an asset that's going to grow the rest of your life and provide all these benefits, you can eventually convert that term policy into a whole life insurance policy if you want, when you're ready, right? Now, when I say when you're ready, what does that mean? Well, that brings us to the next part here, when to buy whole life. And the way that I set policies up, again, custom designing them for high cash value, you have to be able to save money consistently. And because we treat these policies like very efficient savings vehicles, like emergency and opportunity funds that just happen to have a death benefit attached to them. That's how I treat these policies. And you need to be able to save money on a consistent basis in order for it to make sense. Because if not, then it's not going to work for you. Okay. You got to be able to save money. That means increasing income, managing expenses, making sure that you're making more than you're spending, not the other way around. All right. When you get to the point where, again, you want to finance your own purchases, because again, we can use our policies to purchase vehicles. It's the very first thing I did with my policy was buy my vehicle. And there's so many benefits to it, guys. I have an entire video on why I believe using a whole life policy to purchase and finance a vehicle is the absolute one of the best ways to do it, to buy a vehicle, hands down. It's so much better than paying cash, and it's so much better than financing through a traditional bank, 9 times out of 10. All right, I'll link that down below. But we can finance our own purchases because, again, we can access the cash value in the form of a policy loan and make the purchase, cover the emergency, take advantage of the wealth building opportunity. For example, I can borrow against my policy at 6% and I'm lending it out at 13% plus points on a real estate deal. Now I'm acting like the bank, where the bank pays us 1% on our accounts and then they lend it out at 4 to 5. I'm doing the same thing, guys. And it's because I have access to the cash value. You don't have that with a term policy. All right. And then also when you get to the point where, like I mentioned earlier, you want an asset that's going to grow for life, then definitely time to at least have a conversation about dividend paying whole life insurance, see if it makes sense or not, because it's very, like I said, it's very, very similar. Hopefully you see the similarities. It's very close to, it's the equivalent of buying a home versus renting a home, right? It's going to be an asset that you own for the rest of your life. It's going to grow the rest of your life and provide so many benefits, especially in retirement too. Again, it's a separate video, but there are a lot of benefits in retirement to having whole life insurance as well. It can be a volatility buffer. It can provide supplemental tax-free retirement income, all that stuff. It's amazing, guys. So anyways, I'll go ahead and wrap up with that. Hopefully that was helpful. Hopefully it just gives you a different perspective on these things. It's not to say that everybody needs to buy whole life insurance right now. Obviously, you see I'm very passionate about it. I'm a huge advocate for it because there's so many benefits to it, right? But that doesn't mean it's right for you right now. The point is you have to analyze your current situation and you have to weigh the pros and cons of these different products to see how they fit into your plan. You can only do that when you understand how they work. All right. So hopefully this opened your eyes a little bit to the possibility and benefit possibilities, but primarily the benefits of dividend paying whole life insurance, comparing that with buying term insurance and what makes sense. So anyways, hope that was helpful. If you guys have questions or feedback, drop them down in the comment section below. Would love to hear your thoughts, and I hope you're crushing it, and I'll talk to you in the next one. To your success. Matty Ice is out.